Welcome to part one of New Life CFO's program about managing your business away from COVID and towards success. So as a reminder, in part one, we're going to be focusing on a 13-week cash flow projection. And I know for a lot of y'all, you might be thinking, oh my gosh, another spreadsheet? What am I going to do with another spreadsheet? Or you might be thinking, why do I need to focus on 13-week cash flow? Well, here's the most important thing that you need to know. Perhaps your friends will forgive you if you cheat at golf, but no one, and I mean no one, is going to forgive you if you run out of cash. Not your employees, not your vendors, not your landlords, and quite frankly, not your customers either, because now you're affecting their business. So during these points of stress, knowing exactly how much cash you have week by week and making decisions so that you never run out of cash is the most important thing. So let's say that you do run out of cash and you tell your employees, hey, it's going to be tough making payroll. Well, here's the problem with that. Not only is it a problem not making payroll, we all know that, but guess who are the number one people who can go get a job anywhere? Well, it's your best people, right? So making sure that you don't have things like I'm going to run out of cash and disrupt my employees is very important, because the very people that you need to turn your business around are your best people. And as soon as you disappoint your best people, your best vendor, or your landlord, is as soon as you know that you're not going to have the partners and people to turn your business around. So again, remember that no one, and I mean no one, forgives you for running out of cash. So a lot of y'all are very good about looking at your cash balances. In fact, when I ask CEOs, name 3 things that you look at every month when you get your financials. Well, number 1 is revenue. Number 2 is usually my bottom line. And number 3 is my cash balance. When I'll tell you that you just looked at 3 of the most misleading things about your business. Now, in some future things, we're going to talk about revenue and your bottom line is about why those are misleading. But today we're really going to focus on cash and why that is so misleading. So a lot of y'all know that when you're a fast-growing company, you're consuming cash voraciously. You're hiring people, your AR is increasing, your inventory is shooting up, and you find yourself starved for cash. The reason is your balance sheet is eating up a bunch of cash to fund your business, to fund your working capital. Now, the reason it's a false indicator sometimes on the downside is your very balance sheet, when you go over that sales curve, you see your revenue going down, but you have tons of cash. And the reason you do is now your balance sheet is giving it all back to you. Your AR is starting to all be collected. You're liquidating your inventory. So you feel artificially comfortable. With a rolling 13-week cash flow, you're going to see over the next 3 months exactly where your cash is coming from and exactly where it's going to. And what that allows you to do when you use it properly and consistently is to make short-term decisions about moving purchase decisions, payment decisions, vendor decisions from one week to another so that you never get caught behind the trap of running out of cash. Now, as we go through this, one of the things that we're really going to focus on is the structure of your rolling 13-week cash flow. Why is it different from your P&L? Why should you have 2 things when you're looking at your profit and loss statement or your income statement? How is it different from that? And then we're going to get into how you use it to manage your team and your company. So the first thing that you need to understand is a lot of y'all look at your financial statements every month and you're going to look at your P&L. Well, this is radically different from your P&L, and here's why. The first is timing. So most companies close their books on like the 10th or the 15th, and if you're really good, you're going to close it on the 5th. So if you closed it even on the 10th, let's split the difference there. You're now 10 days after the month end, and you have just now, it's 40 days since you last understood what your last measurement point was. So let's say that you're looking at your financial statements right now, and it's the 15th of the month. Well, you're now looking at what happened on the 1st of the last month. That doesn't really help you in making decisions about next week because that history is already gone. So your P&L is too slow to give you the information you need to make sure you don't run out of cash. The other thing that's really important is your P&L, because it's an accrual-based deal. And yes, I'm a CPA, so I love accrual accounting, but it doesn't tell you the ins and outs about what your cash demands are and what your cash resources are going to be. So when you think about your 13-week cash flow, what it really focuses on is not what your revenues are going to be, but what your collections are going to be, right? So when are you going to get that big check from Jim and from Jill and from Dave? Exactly when you're going to get it, because that's going to help you understand what it's going to do. So you flip it around, you start looking at your receivables and what weeks are you going to be collecting what amounts from which customers. right? So that's not something that you're going to be doing, but it is something that your staff accountant is going to be doing. The next thing that you look at is on your receipts. We're going to go from receipts down into disbursements. And for disbursements, we don't have to get crazy about all the line items on your P&L. We're going to look at the big, really important things. Number one is we're going to look at the payments you have to make to your vendors. Because if you don't pay your vendors on time, then you're not going to be in business very long. So along those lines, just like we did on our receivables and looking who's going to pay us what weeks, we're going to look at our payables and start planning out the payments we're going to make each week as we go forward. Now that sounds like it should be pretty easy. But if you're a company in distress and you have very important vendors, then you're going to be playing a little bit of a game about when these vendors get paid relative to the stress in your business and keeping the doors alive and the goods flowing into it. Now that might mean that you stretch one vendor out to 50 or 60 days, while the others you're paying in 15. It has to do with how critical they are and how much cash that you have that you can feed them. So at times you might be dripping cash to them, and sometimes you might flood it to them depending on their importance to you and how much cash that you have. But again, we're going to go through your payables and start determining over 13 weeks how much are you going to be paying out. Now, if you think about 13 weeks on both your collections and your payables, well, you don't have 13 weeks worth of that information in those accounts. So then you're going to be looking at some of your future projections about your sales, your purchases, and then flowing those back through into future disbursements and future receipts. The other big thing that we're going to look at and make sure that you understand exactly when it happens is payroll. Now, you know when your payroll is, but it's strange how often we lose sight about how big the check is, when the check has to go to the payroll company to fund your payroll versus payroll's on the 15th. Well, payroll might be on the 15th, but you're actually having to cut that check maybe on the 10th, 11th, or 12th so that they can sit on your money for a couple of days to get that done. And it's interesting when people have weekly or biweekly payrolls, they lose track about the lumpiness of those big disbursements. And again, you don't want your best people walking out the door just because you got sideways about the lumpiness of your disbursements. After that, after we get satisfied about we know when payroll is, then we're going to be looking at your big benefits, because that's usually the next big thing, and then your recurring systemic required expenses. Call it leases, call it your landlord, your rent, those type things. And we're going to plan those out because, again, those things have to go out the door. Lastly, that'll tell us how much cash is coming from our operations. And below that, we're going to look at our other cash resources and plan those out. And by other cash resources, I'm talking about payments that we have to make on interest, payments that we have to make on leases or debt obligations. And we might be looking at receipts that we'll be getting from our bank for a line of credit and things of that nature. So the great thing about our 13-week cash flow is how you manage your banker as well as how you manage your company. When you're managing your banker, here's the most important thing to remember. Your banker's okay that you might come into a period where you're short on cash. What they're not okay about is that you don't have a plan. If you go to your banker and you have a plan and you can tell them, I need X amount of money for Y amount of time, and here's the plans to reverse that situation, you'll be stunned at how often you're going to get money from your banker. If you go there and says, I have no clue about how much I need, and I have no clue about how long I'm going to need it, you'll be stunned at how seldom you ever get that money. So going to your banker with the plan and knowing in advance what weeks you're going to need it is critically important. It drives your credibility up to the banker, and with your credibility with the banker, then the banker's credibility with their credit committee goes up. Therefore, your success of getting money from your banker goes up. Now, managing your banker is just one aspect of your 13-week cash flow. Actually, managing your company is the most important thing. So when you're looking at this, here's what I highly recommend is your practice every week. Number one, on Monday morning, your accountant, your staff accountant, your controller, whatever it is going to update the 13-week cash flow for what actually happened last week, new information about disbursements and everything else that are going to be taking place in the future weeks based upon recent feedback from your customers or your vendors when things are coming in and out. And so they're going to update that and give their best ideas and suggestions about what the impact is going to be. After that, every Monday, you need to sit down with your accountant and possibly your management team and go over that so you're all managing the commitments on cash together as a team. Creating visibility is very important. So if you're one of those business owners that doesn't like to share their numbers, then more of this responsibility is going to be on you. But you need to review this every week with your accountant so you can see where there's a cash dip. And then you can work proactively on those cash dips or deficits, like it shows in week 8 that you're going to run out of cash. You can start working right now about what it's going to take to get it in. And perhaps that means that you personally make calls to certain big customers about accelerating those payments. But now you know what has to happen. So information is only good like this if the information leads to action. So the biggest issue that people have is they don't have the right information, then they don't take the right action, and then they get surprised when they run out of cash. So that's the most important thing. If you want, go to our website, and we have a couple of templates that are ready to go for you to download as far as a rolling 13-week cash flow. We have one that is a basic, simple projection, and we have another one that is a more complex, depending on the sophistication. I recommend that you start out with the simple one, and then once you master that, you can take a look at the more complex one, because it's going to get more into the math about when your payments are going out relative to your purchases and when your receipts are coming in relative to your sales. I hope that makes sense. If not, give me a holler. We'll be happy to answer any questions that you have. But keep in mind that your rolling 13-week cash flow is the most important tool that you're going to have in your quiver. And it's the most important tool that I'll tell you that any CFO would implement as soon as they walked in your door. So if you don't have one, you're missing out on what most people consider their most critical tool. I appreciate your time. Hope this helps. And be sure to go to our website to get your templates.